So just before Zach came on, I got permission from his people to chat a bit with him in the green room while he was having his champagne and all the lobster and stuff. And so he says to me, he said, I'm changing my tune on the market a little bit because sometimes things are just too cheap to pass up. And that perked my ears. So I got permission from his people to bring him on. When he's done, he's done. Okay, Mr. Abraham is done with his lobster. We'll talk about this with the help of our free speech platform, the ToddHermanShow.substack.com, and of course with God Almighty.
The Todd Herman Show is 100% disapproved by big pharma, technocrats, and tyrants everywhere. Now, from the high mountains of free America, here's the Emerald City exile, Todd Herman.
Today is the day the Lord has made, and these are the times through which God has decided we shall live. Zach Abraham, my friend and brother, Chief Investment Officer, Bulwark Capital Management, joins us. Zach, thank you for letting me talk to your people this morning, and I see that you're well taken care of. How was the second lobster? As good as the first?
Well, yeah, but I gotta let you know, man. I got the private jet warming up on the tarmac right now, and my good buddies Elon and Vivek want to consult me on Doge, some issues in Doge.
Right.
So I can only promise you 15 to 20 minutes. I'm kind of a big deal.
God, man. You really intrigued me. There's a lot of things to talk about today. I read this analysis that NVIDIA might be more important to the market than the Feds and jobs data. That's crazy. We saw NVIDIA dropped on Wednesday, I think it was. We got to talk about the World Bank and they fear Trump. But let's start with this thing you said to me, kind of changing your tune a little bit because there's things that are too cheap to pass up. And then you said something about the Chinese word for risk. So let me just shut my speaking hole and listen with my listening holes.
Well, obviously there's been a lot going on, politically, financially, all that kind of stuff that everybody's aware of and that we all know. And listen, it's headlines like that one right there that really boost my belief in where real opportunity lies. And I'm getting to the point now where I honestly think, and I feel this with a very high level of certainty, which I don't usually say that. And I don't want to get too specific because I never want people going out and making investment changes or trades based on what they think, I said or did, because I could be wrong too. I've been wrong plenty of times. Having said all that, that statement is true. And yet that is also one of the prime reasons why I think we are going to look back in a not too distant period of time and see this as an incredible investment opportunity, and perhaps even generationally, a generationally exceptional period of time to invest. And what I mean by that is, I don't think that writ large for the entire market. As a matter of fact, I think the market is going to produce extremely underwhelming results over the next 10 years. I don't think it's because any big disaster is going to happen. There's always the potential of that. I just think that when you look at valuations, if you just look at history as a guide, whenever you get a market valued this richly, and we've only had it valued this richly 2 other times since going back to 1870, that returns are very anemic going forward, right? Which makes sense. I mean, you fast forwarded all the gains, right? You've got third most expensive market on one metric, most expensive market on another 9 metrics. So, I mean, it's right up there with one of the 3 craziest periods of times in market history. And yet the other thing, just as crazy as all that stuff is, and I think we should get it a little bit into crypto and MicroStrategy, a company that's at the heart of the whole crypto movement right now, is as crazy as it all is on the insane side, meaning just stuff that makes absolutely zero sense, people buying because something's going up, not understanding or paying attention to the underlying fundamentals. We've talked about this before, but I honestly think that we've reached a point of, and again, because I'm saying this probably isn't true, but I think it probably won't play out that way. But I think that we've reached a point where it literally is time to completely ignore short-term results and start buying the value that's out there. Meaning we had a moment the other day. Now, don't get me wrong, man. I would love to sit there and be like, this never bothers me. I am immune to emotions. That's not true. We owned a gold stock the other day. It was a very small position, a little more speculative, but deeply undervalued, deeply undervalued. And they reported earnings. The earnings included a little bit of a delay in their underlying, process, the build out of their different properties, and a little bit of margin slippage. A little disappointing, but didn't change the long term picture of this company at all, or how deeply undervalued it was. On that news, the stock sold off 60% in a single session. Okay, so to the point where it was trading at about a 60%, 65% discount to where the newly hired CEO had just invested millions of his own personal money buying the stock, right? And it's at a 60% surcharge to what's currently going on. And so don't get me wrong, that hurt. And that really made us second guess what's going on, because we're looking at the results going, this doesn't even make sense. Why are you selling this off? This thing's so deeply undervalued, right? We went back and checked our numbers. And I'm not going to give you the name of the company, but we went back and checked our numbers. At the time when we were looking at this in this past week, the stock was trading around 60 cents a share. Okay. When we go look at the resources, the confirmed gold and silver that this company has in the ground, that is worth $23 per share.
Oh,
$23 per share. The stock's trading at 60 cents. Okay. Could it go to 40? Sure. Could it go to 25? Yep. But I think you've reached this time where you don't care. And as a matter of fact, I think you've reached a time where you cheer for it to go lower. Because when people are willing to pay $1 for 10 cents, you sell it to them until they don't want anymore, right? If people are willing to sell you $1 for 10 cents, you buy it until you cannot buy anymore, right?
wow.
And look, I am not telling you to go load up on gold stocks. They're not all the same. I'm not telling you to. What I am telling you is this lunacy, I think, has reached a point where you're looking at these companies and going, the disparity. And here's the thing, a lot of these scenarios, the company has their own fate in their hands, meaning the stock's been beaten down so much. If they cash flow a fraction of what they're projecting, they could buy back 50% of the shares outstanding over the next 3 years. So they could issue special dividends that are the equivalent of 15%.
You've explained this so well, and I think I get it now. And let me take a second here and do something we need to do, talking of discounts and availability. But I want to bring the video into this because I think I get it now, Zach. And please pay off this thing, the Chinese word for risk, because you said that in the green room in a second. Do that in a second. There is a discount that I'm telling you right now, it won't last. It can't. It's impossible because they'd go broke. My friends Matt and Wade at Bioptimizers have decided to take the entire website, everything, to a 25% discount. You've heard me talk about Magnesium Breakthrough, helps you with sleep and controlling stress. You haven't heard me talk about some of their extended products, such as this. There is the Ultimate Gut Health Stack. And this optimizes neurotransmitters, it eliminates bad bacteria, it boosts good bacteria, it helps repair gut lining, it elevates your mood and your mind. They've got that stack. They've got a stack for keto, paleo diet stacks. People eating that way, you have got to supplement if you're doing it that way. You really do. I've talked about Sleep Breakthrough. If you truly can't sleep, and even Magnesium Breakthrough will not help you, I have tried Sleep Breakthrough, and it is profoundly helpful. There's Masszymes, which produces 1,200% more amino acids in our bodies than versus people who don't take Masszymes. There's P3OM, the prebiotic. They have a Cognibiotics blend, which is about helping our cognition and processing speed. And they test this stuff all on themselves and then take it to third-party testing. They outsource their safety testing. They give you a 365-day money-back guarantee. They've got a Berberian Breakthrough, which helps curb carb cravings. You're going into keto and paleo, that stuff will help you stay on it. There's Mushroom Breakthrough, which I take with my coffee, which takes the edge off of coffee. Everything, 25% off. Go to bioptimizers.com/Todd. Use promo code Todd to participate in these savings, 25% off. Bioptimizers.com/Todd. Use code Todd. Also unlock the opportunity to get free $100 in free gifts from Bioptimizers. Bioptimizers.com/Todd, promo code Todd. So let me see if I'm tracking here, Zach. The insanity of NVIDIA, which had on Wednesday, they dropped. There were some revenue forecast disappointments because there's exuberant expectations of this company. Their stock price is completely irrational compared to their growth. It's a good company. You've said it's maybe even a great company. But the fact that it might well be more important to the entire market than the Fed's and job data shows the level of insanity on these popular stocks that everybody's buying because everybody's buying. So more people buy because more people buy. Meanwhile, your gold company and companies like that can't buy attention. They can't get attention. And so we have all these opportunities for those of us who are looking at this from the long view, saying, are you kidding me? I can buy a $23 stock for 40 cents and just wait until math makes a comeback.
Yeah, obviously we can't, nobody can look at you and say that that company is ever going to trade at $23, right? We're saying that, if you do the math, that part of it, and they've got some liabilities on the balance sheet too. But I'm illustrating though, like the unbelievable disconnect here between the actual value and the prospective value, because there's some forward-looking stuff into that $23 per share, but the spread is so wide, right? Like you can come up wildly short of that $23 estimate and still make 10 extra money. You know what I'm saying? Like, so, and again, none of these are guaranteed outcomes, but here's the thing. It's not just with the gold companies. You see it all over the place. You go look at a company like Google. Okay. Now this isn't nearly as good of an example, and Google is not as clean in so many ways. I think it's exposed to more geopolitical risk in a lot of ways. Well, it is and it isn't, but you see pricing anomalies everywhere because of these dynamics playing out in markets. Like I said, you go look at Google. Google is a company that is growing at 15% a year. Let's go compare it to Costco. Okay. Google is a company that's growing at about 15, 16% a year. Costco is growing at about 9.5. Okay. Google's margins are in excess of 30%. I believe Costco's are right around 4. Okay. 4 to 6, I would say somewhere in there. And I might be being generous, but they're a retailer. It's not great margins. You go look at, margins are better. Go look at the balance sheet. Google's got, Costco's doing well, but Google's got, ridiculous amounts of cash on hand. They've got a more diversified business. You look at all that, then you go look at, Google growing at virtually double the rate, almost double the rate of Costco, margins that are, 8 to 10x what Costco's are. Flip around, look at the valuations. Costco's trading at nearly 60 times earnings and Google's at 21.
Okay.
Right. So again, not telling you to go load up on Google. What I'm saying is that these are examples of what usually, if you want to go find out you want to look through history and find out the guys that typically do the best, put up the best performance numbers in any given cycle, right? It's usually the guys that were investing the heaviest into the most underperforming sectors at the height of the previous bubble, right? Why? Because that's where the values are. It doesn't mean that all the things in those categories are going to do well. What it means, if it's in that category, it's probably pretty cheap, right? Because it hasn't performed. Especially that's magnified now in the longest and biggest bull market we've ever had in US history. So if you're looking, right, the number one way to manage money over the last 15 years was throw your money in the NASDAQ and just let it ride, right? So passive investing has been almost the impossible form of investing to beat in this whole cycle. Okay, well, guess what? That creates all kinds of anomalies, which we think is setting up the next cycle, which is the inverse, where it's going through the indexes and picking out these companies that for stupid reasons have been completely left behind and rejected, right? As good as the pull passive buy everything has been over the next 10 years, I firmly believe it's going to be the inverse, that if you want really good and excess returns, you need to be able to figure out where the value is, because that's going to, in my opinion, and if history is any guide, that it will turn. And when does it turn? It turns when the largest amount of people are the most sure that it never is going to, right? And you're there now. So you look at NVIDIA, like you were asking, another classic sign of this. I think that headline is 100% correct, as crazy as that is. Why? Because do I think it let's not confuse it. I don't think it's the most important stock as it relates to the underlying economy, but as it relates to the stock market, absolutely. Reason number one, you've got a market where the number one source of new flows are ETFs, passive investments. NVIDIA is the biggest company in the S&P 500, so it gets the biggest amount of the flows, right? So if NVIDIA keeps going up, that is a really big pull on the rest of the market to go up, right? If NVIDIA goes down, that is a really big anchor pulling the rest of the market down. The other thing is what is everybody the most excited about? AI. NVIDIA is the center point of that, right? So if NVIDIA trips, if NVIDIA trips by 10%, the AI sector as a whole will probably get hit for 30. Would be, that's my guess. I mean, obviously I can't guarantee that, but yeah, I think that's 100% correct. But again, step back for a second. That is precisely why you shouldn't be loading up on companies like NVIDIA, because that's idiotic. That is irrational. We are talking about a business based on math, numbers, and cash flows, right? Saying that all of these other companies are going to lose value because one company that's trading at a valuation that would make an aircraft carrier full of drunken sailors blush, right? Like that's ridiculous. Okay, but it's true. So what does that tell me inherently? It tells me that this is a market that is very detached from logic. And what it also tells me is that, it's like the little kid, like we've used this analogy, the little kid digging through the pile of horse manure, right? There's a pony in here somewhere. And that's the way we're looking at it, is saying, look, I agree with you. And that's why I am so excited, because when markets become this value and fundamentally blinded, for a fact there are dollars selling for 10 cents. And that's what we're excited about.
You remind me of this, a couple of farmers I knew in Utah, and they bought some land down in Nevada. And bit by bit, they were selling off the land, and bit by bit, the casinos were coming in, and they did this crazy trade. Is they just did this thing where they all they wanted was bridge rights. That's it. Like they sold and they negotiated and they traded, and they bought some bridge rights to bridge this river down near Mesquite, Nevada. And lo and behold, the casinos look at these idiots, these buffoons, who are willing to make this trade just for bridge rights. They didn't have their engineers go look at the river. They did not look at the historical flow of the river. They did not look at the overflow of the river. They did not look at the historical floods. They did not realize that in terms of geological stability, there are two places you can build a bridge that's not going to sink. The farmers knew this because they'd farmed the land forever. Everything else here is sand and dirt and mud. There are exactly two places our tractors didn't sink. Exactly two places along this entire area of river that you could safely build a highway without doing all sorts of infrastructure build. There's only one place that we're going to have control of. We need the second one. One at the front of town, one at the end of town. This was about 40 years ago. When the casinos started to have really good business come in, they needed some bridges. So they went back, started to make the plans to go to the city and build the bridges, and they started going through the paperwork. So the grandkids of those guys got a phone call about those bridge rights. They saw this when no one else saw it. And the casinos thought they were going to come and play with some farmers. Well, they played with some farmers' grandkids who had been to college. One got turned into a lawyer, one got turned into an MBA. So they were perfectly happy to lease the bridge rights to the casinos. And so they've leased them.
Wonder how much they were leasing them for.
Oh, well, enough.
Whatever they wanted.
Their lives materially changed. And one of the things they did, and I question the wisdom of this, was we get a whole bunch of free stuff at the casinos. They're super fun people to go to casinos with because they don't pay.
Yeah.
Really interesting. All right, we need to talk about this company MicroStrategy. You talked about this, and this has to do with cyber and cyber coins and Bitcoin, and we'll talk about this with Zach Abraham. Let me tell you this. There are bets being made all the time. Sometimes they're just, investments. My friend Steve Anderson is the managing partner at Renew Healthcare. He, like Zach, has made a career out of analyzing things. He happens to be a quant, so super high-level math guy. And he turned his mathematical analysis towards the markets. That's how he made his money. He built hedge funds, and that's how he built his money and built his wealth. He's a smart guy. He is a very friendly man. He really likes serving people. He gives a bunch of money to an orphanage because he himself is an orphan. And so he has given a whole bunch of money to orphanages in Mexico because now he does business out of Mexico because he got a disease. And doctors told him there's no cure. You're just going to bit by bit not be able to do things, including golf, which is Steve's passion. Aside from his wife, Kelly, his passion is golf. He got informed that he could go to the Middle East and get these things called stem cells from placentas and umbilical cords. He's a Christian man. He doesn't want anything to do with abortion. He got the stem cells, and he learned that you couldn't do this in America. So he started to do the math. It made more sense to open the business in Mexico. Then Steve, the nurturer, took over. He's going to control all the processes. So when they acquire these stem cells, they check on the health of the women and the babies throughout the process. They pay for the birth. They only use stem cells that are the very, very best. I use a strain that has never been touched by the modified RNA injections, not ever. And Steve wanted to control more. So they culture the stem cells so that they have complete control over them. And they even create their own oxygen. They refuse to bring it in because he doesn't know who's touched it. He can't confirm its health for you. If you're being told you have to have surgery, this is the way you're going to have to live, your traumatic brain injury is too bad, there's nothing we can do, pause. If you're being told that you can't golf anymore, pause. Call or actually go to renew.healthcare, RENUE.healthcare, and they will tell you if these stem cells can rebuild your body's parts because that's what they do. Fast forward, Steve and Kelly, when they're down in Mexico, they live on a golf course. Yeah, he golfs again. It's renew.healthcare, RENUE.healthcare. Zach Abrams with us, Chief Investment Officer, Bulwark Capital Management. Zach, you're talking about this company called MicroStrategies going around and buying up all the cyber currencies. Or at least that seems to be the strategy. So this seems significant.
Yeah, I mean, look, again, you look back through financial history, this is yet another classic sign that you expect to see in bubble environments, which is, and I want to be really clear, guys, when I'm talking about a bubble, I'm talking about a kind of a unique bubble because I think in some ways the bubble is so much more widespread in terms of who's participating in it. Yet at the same time, the bubble is very selective in terms of what types of stocks and what types of things it's involved in. So when I'm talking about this, I'm not foretelling a giant market crash. I think things are going to crash, but I also think that the saving grace in this market is that there's so much stuff that's undervalued. So while a lot of this ridiculous stuff is getting smoked, I would expect this other stuff to return back to somewhere close to intrinsic value. And so I actually think this process could occur without, seeing a 40% market drop. I don't think it's necessarily like, an apocalyptic thing. I just think that if you're riding the things that have worked, including the general market over the next 5 to 10 years, I think you're going to have significantly different results than you had over the last 10 to 15 years. And I think you're going to have a very hard time keeping up with inflation rates. But MicroStrategy would be another classic example that you'd expect to see. If you had a checklist of things that you expected to see in a bubble of some kind, this would certainly be one of them. What MicroStrategy is doing is it's a relatively small sort of niche tech player. I'm not 100% sure in exactly what they do, but I believe that they kind of provide some equipment to to cloud-based businesses or something like that. Don't quote me. The underlying business is not impressive at all. I want to say it does revenue in the neighborhood of like 700 to 800 million a year, growing at a very modest rate. Kind of a not fine little business, but kind of a snoozer, right? Well, what the CEO did, and interestingly enough, this CEO was the CEO of another company back at the tech bubble in the late 90s that crashed by 90% and got obliterated too. So it appears he's going back to the well. But what he's doing is he is issuing tens of billions of dollars in convertible debt. Okay, so debt that could be converted to equity, and the debt pays 0% interest. Okay. And the reason you're buying it is because of a convert. So it's what you're hoping is that you get an arbitrage where you're able to convert to an abnormally large size of equity. So if you buy a convertible debt note, technically what you're hoping is that the company has a big drop in its equity prices, right? Which allows you to convert and get a big stake of the company. Okay,
So here's your bet. You're buying a convertible note. You're loaning the company money, but you have the option to say, actually, we don't want the interest you were going to give us.
Well, remember, they're not paying interest on these ones.
No, I
so
got
that's
that
not
part.
even an option.
No,
Yeah,
I got that
Yeah.
part. But traditionally, convertible debt is someone loans you the money and you're paying interest, but they have the option to come along and say, yeah, we don't want the interest anymore. We want equity. So we want
Yep.
to turn that debt into equity. But that traditionally comes with an interest payment. And the investor wins either way, right? Small or big. If the company's doing
Yep.
super, super well, it converts, they get equity that is now pays them back more money than the interest would have. But he's doing this with 0% interest rates, and issuing tens of billions of dollars of this.
Yeah, so billions. So he's just levering up the balance sheet in an unbelievable way, turning around, taking that money, buying a non-cash flowing asset. Okay, so let's stop right there. Okay, I don't care what you think about Bitcoin or any other cryptocurrency. This is an old movie that's been around, that's been played many times. When you are levering up a balance sheet to an ungodly amount to buy a non-cash flowing asset, it is only a matter of time until you get margin called. And the reason for that is, at some point, especially if you are buying something that is as volatile as Bitcoin. Now, to Saylor's credit, he rode the last Bitcoin drop down from 60 some thousand down to 15 or 16,000, and he wasn't forced to liquidate yet, but that point will always get there. And at some point, right, there will be a mismatch, meaning he will, as an equity holder, you will have two choices. At some point, Bitcoin will drop well below their average purchasing price, right, of the deal. Because remember, they're purchasing the largest dollar amounts as Bitcoin goes higher, right? So their dollar costs de-averaging, meaning their average cost for Bitcoin is continually rising, right? Well, so are the liabilities. So at a certain point, Bitcoin drops to a certain level. Okay, they've got to do one of two things. They either have to pay that debt back, or it's got to convert into equity. Well, as soon as that debt converts into equity, it's going to trigger all the other equity converts, right? Because they're sitting there going, well, we got to get in here, right? And swap this thing, Anyway, what you eventually get to is you've got two options as a shareholder of the stock. Eventually, they're going to be either massive forced sellers of Bitcoin, or you will get diluted down to nothing. Now, the irony is this company's stock trades in lockstep with Bitcoin, except it moves up on average about 4% for every 1% that Bitcoin moves. Now, think about that. That's insanity. You're buying the stock because of the Bitcoin, okay? But in this case, the Bitcoin has a massive liability attached to it, which is this convertible debt that is going to convert because the company doesn't have the cash to pay the debt back, right? It doesn't pay an interest rate. So it's going to convert to equity, right, at some point. Okay, so you're saying that owning an ever decreasing percentage of a company that owns Bitcoin is better off than owning Bitcoin itself.
This is insane. And you mentioned Saylor, that's the CEO. He's an Air Force veteran, so thanks for serving the country. But that defies explanation. I mean, let's put this in common human terms. There's a company that buys up with zero interest rate loans all sorts of tickets to concerts. So they buy them, and it's just convertible notes, and you can buy and you can go to these concerts. And so time and time again, they're buying up these concert seats, and you have this, and eventually you're going to go to these concerts, or you could buy a ticket and go to the concert and pay less, far less. And this that's a 400% premium he's getting to actually just owning Bitcoin.
Yeah. And it's just, and that's one of the problems you have about so much record retail involvement is that the guy says things. I read this explanation from a retail investor on Twitter this morning about it, saying like he finally gets what Michael Saylor is talking about and why it's worth so much more. And I'm sitting there going, this is nonsense. You're getting swindled. And look, it is entirely possible that, and I've listened to Michael Saylor talk, it's entirely possible that he believes it. There's a part of me that thinks he does believe it. I don't think he's a swindler per se. I just think he's incredibly foolish. And I just, again, I look at him and I'm like, I look at these people and I go, guys, look at the structure of this deal. If you want to own Bitcoin, like you're guaranteed, if you buy the stock here at this price, you're virtually guaranteed that your ownership percentage is going to get diluted. And the only asset of size that matters on the balance sheet is Bitcoin. So you've just figured out a way to negate the one biggest upside of Bitcoin, which is that you can't make any more of it. Well, right? Because as you print more of anything, right, the value of that thing becomes less. Okay, well, how is that any different than buying a company where your underlying share in that company is constantly being diluted? So like, it's crazy that this is trading at a premium to Bitcoin because the whole idea behind Bitcoin is you can't make any more of it, right?
Yeah, I just saw this tweet you responded to with clown faces and laughing faces. Michael Saylor, CEO of this MicroStrategy, is the new Warren Buffett.
Yeah,
even I'm listening to this going, this has to collapse. I mean, you could have bought 10% of MicroStrategy. And now it's 9% and 8% and 7% and 6%. Every single day, you are guaranteed to make less money on your investments. Every single day, more people buy. You could have taken that 10% you bought and bought Bitcoin and not have this dilution ever. Well, not ever, because Bitcoin could go down,
but it's crazy, man. When you tell this to people, it's a very unique. And I've talked to buddies of mine that have been in the industry for 40 years. It's a very unique attitude in this market where they look at you and they go, "Oh, you're just mad that you weren't." And you're like, "What are you talking about?" And they're like, "Well, who cares? You're not right. The stock went up." So like everybody has this attitude. If the price goes up, that is reality, right? And it's really bizarre because you've never had that attitude wholesale in markets like this.
Oh,
right. But
there's been one time when I was raising money out of Silicon Valley. There was a time, and I saw it. I saw people whose companies had never turned a profit. They were nowhere near a profit. They were 20 years away from a profit buying helicopters. I had dinner with them, and the conversation began sitting down with the CEO of Salon.com, sitting down to eat dinner. "Hey, Michael, how are you? I bought a helicopter."
Yep.
Wow.
But I mean, but I remember what's so unique about this is that mania lasted about 2.5, 3 years, right? This has been going on arguably for 5 to 7 years.
Right.
I mean, it's getting crazier, right? But
it is, and I'm not saying it's the same thing, but I'm saying at that time, I'm looking you in the eye, and there were people who would look you in the eye and say, "You don't get the new economy, man." Like losses,
I remember
things like that. That doesn't happen anymore.
Remember, it's not about cash flow and earnings; it's about eyeballs.
Yes, I got a phone call from a woman I did business with there, and become friends with, and she lives in San Francisco, and we did a lot of business together. And she called me from San Francisco, and she said, "Hey, can I talk to you for a second?" She was with one of those companies where CEOs were buying helicopters. And I said, "Hey, what's going on, Leah? Hey, my husband and I bought this house at Haight-Ashbury." "Oh yeah, on top of the Haight." "Oh wow, up by the zoo." "Yeah, well, we got a view of both sides." "Oh wait, so you're up there?" "Yeah." So we bought it with stock. I forgot. Where's your husband work? ZDNet. Where are you? Salon. Yeah, what's going on? Could you loan us some money? It's funny. They've did this margin call. Apparently, we've got this bubble agreement on our mortgage, and they're just they think our stock's going to get back up. So they've kind of called the loan. So we've got a little time before we have to make the bubble payment. Could you loan us some money? How much are you looking for?
Oh, so they took, hold on. They didn't sell their stock to buy the house. They took a loan out against their stock. Oh, because I'm sure it was going to go up more.
Yeah.
Oh,
So how much would you guys, what were you looking for? $15,000 to $20,000. Leah, how much time does that buy you?
30 days.
A month. You know what? I'd love to be able to help.
That's called good man money after bad there.
A month? Oh, no, it's okay. I get it. It's a lot of money, and, we don't know each other that well, and my husband's father is going to step in and help us this month. Leah, this isn't going back up. No, it'll be good. No, and this is the attitude then. We need to talk about this now, going from the so-called private market. Well, I guess MicroStrategy is private, NVIDIA is private, but I need to run by you some stuff that's going on with the World Bank, and then just some kind of political stuff, since there was this election and all. And I want to talk with you about that, some of the ways we're spending our money as government. Zach Abrams with us, Chief Investment Officer, Bulwark Capital Management. I don't know if you've done this. Have you bought your Bone Frog wine yet from Bone Frog Cellars? You said you're going to do that.
No, I need to. You know what? I'm gonna actually order some for the holidays here.
It's just
I gotta get the wife on that.
I don't know why you do that. Have your people do that. It's bonefrogsellers.com/side. Get the 2015 Merlot. My friends like the Merlot more than they like the Cabernet, which surprised them because they're wine people, and apparently Merlot is ghetto or something. I don't think so. I don't drink wine, but what I know. So my friends who are big wine snobs, they love the wine. They were relieved because they love Tim Cruikshank, the founder and CEO of Bone Frog, who is a Navy SEAL, a veteran. He'd retired, did 3 tours on our behalf, 3 deployments, I should say. He has Bone Frog coffee. You know about. I'm wearing a Bone Frog coffee t-shirt today and drinking Bone Frog coffee. I don't drink wine, but my friends do. My wife loved the wine. My daughter, who's brand new to wine, loved it. I'm getting notes now from listeners and viewers who love the wine. And Tim wanted me to thank you for trying it. It's bonefrogsellers.com/Todd. 10% of proceeds go to the Navy SEAL Foundation to help support the families of Navy SEALs who have fallen in duty. You'll see the Bone Frog insignia on it, which is a really cool logo. That's the insignia of a fallen SEAL. You'll see God Country Team on it. And you'll read this story about how Tim was able to do this with a family from Washington in the Oregon area, the Tri-Corners down there, who are experts at wine. They taught him how to do this and help him make the wines. It's bonefrogsellers.com/Todd. The World Bank, Zach, is a little bit afraid that President Trump might cut their budget. This is after the World Bank, they lost track of some money, and they're looking for it. It was they lost.
They'll find it, I'm sure.
Yeah, it was 24 billion.
Check the couch cushions. Check the couch cushions.
What does the World Bank do? I mean, I know someone whose dad was on the board of the World Bank, Tim Draper, and I asked him one day, what does the World Bank do? And he said,
look,
he couldn't tell me.
Here's something I was thinking about.
Yeah.
That I think that we as a society, not just here in the United States, but around the world, I want you to think about something real quick. Now, I am nowhere near as familiar with the legalities surrounding, the legal structure and the rules and the restrictions surrounding the World Bank, what they can and can't do.
They could do anything. They could misplace $24 billion.
Right. And that's my whole thing. My assumption is that they're set up quite similarly to the central banks around the world, correct? So, and as a matter of fact, my understanding is that they're almost like a surrogate of the world's central banks. But think about this. Take a look at the Federal Reserve. Okay, the Federal Reserve has the ability to create currency out of thin air without any type of approval, right? The U.S. government cannot tell them what to do. The Treasury cannot tell them what to do. Okay, they can issue currency out of thin air. Okay, with no congressional oversight,
no audits, nothing. Can't look at their books.
They cannot be audited, right? What do you think are the chances that if we're able to pull those curtains back, we would see ungodly misappropriations of money, that we would see potentially central banks, including the Fed, illegally funding military actions in places where they shouldn't be, making money off illicit trades like drug and weapons use, Uh, look, I'm not accusing the Fed of this, but what I do know is where there is a lack of transparency, that is never an accident, right? It's never an accident. Where there is opacity, it is always there for a reason. For instance, you don't ever see clouded glass, right, on a door that separates a hallway from a pool, right? You know what I'm saying? Like, where do you now? You walk into a bathroom or a shower door, you're going to see some smoky glass, right? It's for a reason, right? So when you see the Fed, and they have pushed back vehemently against being audited multiple times, what does that tell you? Like, and I just sit there, deductive reasoning, and go, let's flip it around. What do you think the odds are that if we audited the Fed, we wouldn't find any of that stuff?
Zero. Same thing.
I would say I would agree.
Hey, when you have a World Bank, and when I asked Tim Draper, what do they do? Well, they fund projects around the world to help countries that can't afford loans from the United States. Oh, okay, so the United States doesn't have to make loans. Well, no, I mean, we still make loans and we give money out. Okay, so they're a supplement to our foreign aid. No, they don't have that much money. So what do? Well, so they might back, say, a building project, say, in Africa. Okay, so like when we have funds to help build things in Africa, they're a supplement to that. No, they'll buy those things and they'll convert them. Convert them to what? Well, then independent investors will come in. Who gets that money? Well, no, that goes back to the World Bank. What do they do with it? Well, they go fund projects. It's a bank. It's a stinking bank. And we don't get to audit that. We don't get to audit the Fed. I'm telling you, be suspicious of this as a married couple. If you walk into the front room and your spouse is typing away on the phone and they see you coming and they turn it off and set it face down and then sit back from it,
they probably weren't buying you a Christmas present.
Maybe they were, but probably not. When you're at a boss and you walk into the room and people are on their computers and they see you coming and they shut. Oh no! Oh no! Oh no!
Did you kill the feed?
Oh no! It's back. It's coming back. You there, Zach?
Yeah, man. I'm rocking.
All right, hold on a second. So I was just being dramatic, and if you're just listening to this, actually shut the thing. So Alex is going to have to come back. And so when you do that and someone shuts down their computer, what are you looking for? There he is. We'll clean that all up post-production. So when
this is the magic of podcast, man.
This is the magic podcast. Yeah, leave it in. Leave it in. That'll be fun. Just clean it up for the audio version so it doesn't freak the people out on audio. So when someone does that, you know they don't want you to see what they're doing. We know the Fed doesn't want us to see what they're doing. So I hope President Trump comes along to the World Bank and says, yeah, I'll give you more money as soon as you tell me where the $24 billion went.
Well, and look, I think that's the same. I think that's the same thing. Well, what I'm hoping, that same approach to use with the Fed is what I'm hoping is that his threat of inserting himself into interest rate or monetary policy decisions is just leverage for him to get the Fed to agree to an audit.
Oh my gosh, I would love that so much.
Yes, because if that's why he's threatening being involved in the monetary policy decisions, then I'm good with that. If he earnestly wants to be involved in monetary policy decisions, I think that is a train wreck. And that is something that will cost us dearly in the long run.
Yeah,
so
I totally agree with you. And that when I brought up auditing the Fed, and did I tell you that story when I brought up auditing the Fed in Washington, D.C. when I was in the Republican National Committee leadership team meeting?
No, but I'm sure it was like the equivalent. I'm sure the reaction was like having a squirt gun full of holy water in a room full of vampires.
I'll tell you in a second the actual reaction. It was so phenomenal that we need to go through some spending and just I like whataboutisms. So I thought we'd do some whataboutisms in terms of what we've spent in this past year, and just work our way down to some people who might need the money more than the folks we're giving it to. We're talking to Zach Abraham, Chief Investment Officer, Bulwark Capital Management. In terms of money, you might pay a little bit more for Allen Soaps. I'm going to admit it. I'm going to tell you right now, you might pay more. I'm just going to tell you that. Now, you might also feel better about paying more, and I'll tell you that. Because you're going to purchase soap for the rest of your life unless you are disgusting. If so, you make me sick. But no one's really going to do that. You're always going to clean your body. So you might be buying it from Dove. You might be buying it from Ivory. In other words, Pfizer Consumer Health or, Monsanto or big company A, B, C that really doesn't care about you. They don't care about your health. They probably make their products in China, maybe with a little slave labor thrown in. But hey, your skin feels great. So you might make decision to spend more for soap that's made in America, that's all natural. It's made by a family with 3 generations of soap making expertise, and they can't make it 1 billion bars at a time at small batch because they control the process. But here's what you're actually paying for. It's not just the amazing soap. You're paying to employ people. Amy, who got late onset autism, she'd been neurotypical, something happened, she got autism. Now, I can't say what that thing was because this is going on YouTube. Just let you know. Ian, who has autism, is Alan's younger brother. He is responsible for the liquid blend called Ian's Blend. And then there's Alan, the namesake of the company, who is nonverbal, very profoundly affected by autism, as well as some structural health challenges. He's 14. He's been through 18 operations. You try being a happy warrior after that. Alan is. So you're going to pay more for better soap that's made in America and supports hiring people like that. We want 4 employees. Right now it's 3. Your soap purchase for Christmas, even for Thanksgiving, can help with that. Go to allensoaps.com/Todd. Get 10% off all their products there. It's allensoaps.com/Todd. So, Zach, let's run through some numbers for the year, just a year in review. So far this year, the United States has given $24.4 billion to Ukraine, $11.3 billion to Israel, $1.95 billion to Ethiopia, $1.6 billion to Jordan, $1.4 billion to Egypt, $1.1 billion to Afghanistan, $1.1 billion to Somalia, $1 billion to Yemen, $987 million to Congo, $896 million to Syria, $9,000 per illegal immigrant who's entered the country, and Americans who've lost everything through Hurricane Helene are filling out paperwork, hoping very, very much to be able to get $750. Many, many people being denied that $750. You made a joke earlier about Elon Musk and Vivek Ramaswamy and the Doge thing. I start here. I start with this comparison, and I go back and I talk about something you and I have addressed on this show before. It is time for President Trump to come to the table and say this. Every government department starts at 0. It's baseline budgeting time, guys. Your spreadsheets are filled with zeros. Come and make an argument that you should exist. Fair enough?
Yeah. Oh, yeah. Yeah. At 100%. I do feel bad for the Congo. They didn't hit the $1 billion mark. I would attribute that to racism, probably.
It's some ism. Yeah.
You got to get. It's just the slap in the face when you're not a part of the $1 billion United States giveaway.
Right.
That's like not having a seat at the table for family Thanksgiving. You show up, you're like, where am I going to sit?
Well, think you could eat in your car.
Yeah, or you sit outside the garage with a cat. Keep him company. Yeah, there's so much low-hanging fruit. People are like, oh, they're not going to live up to the expectations. And I'm like, look, do I think that they're going to trim an amount of money that significantly impacts our deficit situation right now? No, I don't. Okay, do I think that they could trim hundreds of billions of dollars off of the federal deficit and for us to actually see increased service and increased results? I absolutely think that is possible. I don't think it's not only possible, I think it's fairly easy. Meaning I don't think there's so many of these situations where the money spent on the regulator is the problem, right? So if all you do is get the regulator, not all the time and not with all regulations, but sometimes a lot of you get a 2-for-1 deal, right? You get the money that you save federally, then you get the increased tax revenue off of increased production and increased profitability in the underlying sector.
Yep.
So it's kind of a 2-for-1. So do I think that they should do that? Yes. But here's the reason to be fair to our politicians on the Hill, and all those bureaucrats in the UN, to be fair to them, the reason that they're not giving these people more than $750, I mean, I don't think you're being really fair about it, Todd. When they give those people the money needed to rebuild their houses,
Yeah.
their nieces and nephews aren't getting special board positions that are paying $500,000 a year by some foreign entity.
I didn't even think
Right.
of
So, I
that.
mean, yeah, I mean, so, if nephew Nick ain't getting his sweetheart 500 grand a year,
Yeah.
working for an Estonian, nat gas provider or
Yeah.
something like that. I mean, I mean, look, I wish the folks well, hope they could rebuild their house, but nephew Nick's got to eat, man.
Yeah,
So,
you know what? Let me just say this now. I want to apologize to all the people I hurt by not understanding this better. And I seek to do better in the future. I'll reach out to some of these communities, the marginalized sons and daughters of speakers of the House and et cetera. And we just learn, I fell short of my expectations of myself. And I'm making a small donation, small to my size, to the fund to preserve the sons and daughters of United States senators.
that's what I'm here for, man. I'm
Thank you for
happy to be of
calling
service.
that to my attention. Zach Abraham's been with us, Chief Investment Officer, Bulwark Capital Management, and good friend, great friend of the show. Always appreciate you. It's Wise Counsel Day. Thank you, my brother.
Hey, thanks for having me, man. God bless you and all the listeners.
God bless you. This is the Todd Herman Show. Please go be well, be strong, be kind, and please make every effort to walk in the light of Christ.